wanted to take some time this evening to talk to Shift Gold customers and prospective customers about gold and why those of you who have been sitting on the fence need to get off the fence and buy some gold. Buy it tonight, buy it tomorrow, but don't wait for the price to hit $3,000 an ounce. I mean, you can still buy it at $3,000 an ounce. It's still going to be cheap at $3,000 an ounce, but why wait? Gold closed today up another $28 an ounce. It keeps hitting new highs. Today's close was 2,844, closed right on the high of the day. Despite the repeated new highs in the price of gold, nobody is talking about it, I mean, other than me. I watched CNBC pretty much all day, just waiting for somebody to mention gold, and nobody did. Now, maybe somebody mentioned it after I stopped watching, but they didn't mention gold. They certainly didn't mention that it was at a record high. All they mentioned was Bitcoin. They mentioned it repeatedly throughout the day. They had multiple segments that featured guests that talked about Bitcoin, and they never once acknowledged what was happening in gold. I mean, this is a huge bull market that's taking place off everybody's radar. In fact, when it comes to retail investors, not only are they not participating, they're selling. The biggest gold ETF is GLD. And so far in 2025, and we're now, in February, there hasn't been a single day where the GLD has had net inflows. That means every single day, investors have sold GLD and they have withdrawn their money, and GLD has had to sell gold into the market to cover those redemptions. And it's not just people that own ETFs that are selling. People who own physical gold, coins and bars, are also selling. At Shift Gold, sales have been rather slow. What's helping to support business are redemptions. Customers who bought gold from us in the past, or maybe they bought it from someplace else, are calling up Shift Gold and selling their gold. Now, we're not encouraging people to do this. People are just doing this. This is not what happens in a bull market. And it's not just Shift Gold. I've checked around the industry. This is happening everywhere. In fact, it's probably happening less at Shift Gold than it is at other gold retailers. This is not what you would expect to see in a bull market. Normally, people are greedy in bull markets. They're afraid of missing out on further gains. They throw caution to the wind. But right now, people are fearful. People are afraid to buy. And I've talked to the guys at Shift Gold, and they've been telling me that for months and months and months, maybe for over a year, customers have been saying it's the top. Ever since gold really got to 2,000, remember, we're almost at 3,000. But ever since we've been at 2,000, people have been afraid to buy. They've been conditioned to think that it's going to sell off. And as it moves higher and higher, and I've done multiple, promotions, videos like this, all the way up, urging people to stop waiting for a pullback. There's not going to be any meaningful pullback. We got one, maybe 6 or 7%. That's probably the biggest one we're going to get. I doubt we're going to get another one that big for a while after Trump won, and there was a big rally in the dollar, and there was a sell-off in gold. It didn't even make a full correction of 10%. But the sentiment is so negative that gold stocks went into a full-fledged bear market. They went down 25, 30%. That's how afraid people were. They dumped their gold stocks. And even though gold's at a record high in a big bull market, gold stocks are still in a bear market. That's also unheard of. You have such negative sentiment. Normally, gold stocks lead the metal because people who are optimistic on gold really want to load up on gold stocks because they're leveraged to the price of gold. Gold stocks have been moving up, but gold has been dragging gold stocks higher. They haven't been leading the way. They've been lagging far behind. Again, this is very atypical of a bull market. In fact, where gold stocks close today, they still need to rise more than 10% from here just to get back to where they were in October last year. Gold is over 2% higher than its peak in October of last year. So that's how much ground those stocks have to make up. But the point is that gold stock investors are pessimistic. They're not greedy. They're worried. You need to stop worrying and start buying. If you're not going to buy the top, you're not going to buy. Gold, in my opinion, is going to keep moving up. The dips are going to be short and shallow. And so there's no point in waiting for them. You're far more likely to buy higher than to buy lower. We're still early, really, in this phase of the bull market. You know, the last big bull market that we had in gold was from 2001 to 2011. And gold went from a low of about 250 up to a high of 1900, about an 8-fold increase. Well, then we went into a big bear, and gold pulled back from 1900 to 1050 in 2015. We've been going up ever since. But if this bull market is going to equal the leg in the previous leg, you're talking about $8,000 gold. That's 8 times 1,000. Now, I think that gold's going a lot higher than 8,000. But even if it only went to 8,000, that's a pretty big move considering we're still below 3,000. So you don't want to wait. You have to resign yourself to the fact that you're going to buy the high. And if you want to buy more gold, which, I would advise over time, you better get used to buying the high because that's what you're going to do. And the longer you wait to buy the high, the higher the high that you're going to buy. Now, eventually, right, you're going to have a change of heart. The public is going to wake up and start participating. If the public is not buying gold, you may wonder, how is it that the price keeps going up? Somebody's got to be buying. In fact, somebody has to offset all of the selling. And that is the institutions or the smart money, the big buyers, and the central banks. Foreign central banks are buying up gold. They want to get rid of their dollars. They want to divest and move out of the dollar. And so the best alternative to the dollar is gold, and that's what they're buying. But it's not just the central banks. I've noticed that there was a big increase in delivery notices, first at the London Metal Exchange and now on the COMEX. And what that means is that people who own gold futures contracts are letting the counterparty, the short, know that they want delivery of their gold. They're not going to cash settle these contracts. They're not going to roll them over. They want the actual gold behind the futures contracts. Now, these are not small investors because a minimum, you've got a 100-ounce bar. So these are big investors who are intending to take delivery of their gold. They don't want to gamble with it anymore. They actually want the physical metal. Now, this could be the beginning of a major short squeeze in gold as they have to replenish those stocks and they may run out of gold. And it may be impossible for some of the shorts to deliver. And now they have to go into the market to buy the gold that they sold that they never had. So we can start to see some real fireworks in the price of gold. I think it may begin when the price of gold is above 3,000, which is why I'm saying don't wait for 3,000. Buy it now. Buy it before it gets to 3,000. Now, one of the gifts that we have, because the central banks are the primary buyers and now, bigger investors, we have a near record low when it comes to premiums on coins, small denomination coins, because the central banks aren't buying 1-ounce gold coins. They're buying huge bars. And the same thing with these, the big investors. The small investors are selling their gold coins. And so there's now a glut of them because a lot of them are on the market. So the premiums are as low as I've ever seen them, which again is extremely unique. I've never seen this in all the years that we've had Shift Gold, because normally when gold is made a new high, and this happened during the pandemic when gold shot up, everybody was excited. Everybody wanted to buy. We were running out of gold. People had to wait a long time for delivery. The premiums really shot up because everybody wanted to buy. Well, now everybody is selling. So the premiums are very low. So it's a great time. Even though the price of gold itself has gone up, the premiums have gone down. So that you catch a break. Now, that's not going to last. You know, when the public wakes up from this slumber and realizes what's going on in the gold market, they're going to stop buying, right? The fence sitters are going to, take the plunge, and you're going to see a big increase in demand for coins, and the premiums are going to soar. But before they do, you can buy them now. Now, Schiff Gold has a special on 1 ounce American Gold Eagles that are backdated, and that's no different than really buying the 2025 mint. We're selling them at $99 over spot. That is a great price. I suggest you take advantage of it right now, as soon as I'm done talking here, and buy some of these coins before the price of gold goes way up, and then the premiums on the coin also go way up. Now, if you want to do one better, buy some silver. Now, silver was up big today too, but it's only $32 and change. In fact, it closed at $32.12. As I've been saying, 30 is the floor. $30 silver is like $2,000 gold. I've been saying that, for the past year. Now, gold is almost $3,000. So 2,000 is in the distant rearview mirror. Soon, $30 for silver will look just as far back. So 32, you're getting in about as close to the bottom as you're going to get. And the reason that gold's making new record highs and silver isn't is because silver is the poor man's gold. The central banks aren't buying silver. It's too bulky. They can't store it. The big buyers, they don't want silver. They need gold. And because the little guy is selling, silver is still cheap. Silver hasn't even gotten back to $50, which was the high that it hit not only in 2019, 2011, but 1980. I mean, you're still below 1980 prices when it comes to silver. So if you don't like buying the high, buy silver because it's nowhere near the high. But pretty soon, silver is going to be at 50, and then it's going to be a lot higher than 50. So before that happens, buy it now. We still have, or we're reinstituting the special that we have on junk silver bags, which is U.S. half dollars, quarters, dimes that were minted, before 1965 when we still had honest coins and there was silver in there. But again, the premiums on these bags are very low because the demand is not there. The public is still selling, so you can get a great buy, not only because silver is still cheap, but the premiums are cheap. So you can go to Schiff Gold and get some silver, get these silver bags. They're great for barter if it ever comes down to that. We get price controls, we get a black market. You may need silver dimes and silver quarters to buy food. So in any event, go to the website, schiffgold.com, or call up the guys there. Our toll-free number is 888-GOLD-160 to buy both gold and silver. That is the number to call to talk to the representatives. They're there now, and these guys, they'll be there in the evening. They'll be there tomorrow. Some people might not hear this message live, so they can act on it tomorrow. But again, you want to take advantage of the special that we have on predated 1 ounce U.S. Gold Eagles, $99 over spot. That is a great price for those coins. It's amazing that you could buy them that cheap with gold at a record high. And junk silver, a full bag, or you could buy a partial bag. It's $1.95 over spot. These are 90% silver coins minted by the U.S. Mint before 1965. That's it for now. Don't forget to keep listening to the Peter Schiff Show podcast. There will be another podcast coming up later in the week, so make sure not to miss it. Bye for now.